Welcome to EXOUSIA Investing TV, your premier destination for a wealth of financial literacy, wealth wisdom, and wealth empowerment. Our aim is to empower individuals and communities to achieve financial prosperity and economic independence. Today, let's delve into an essential concept in economics that impacts our daily lives: inflation. Inflation, in the simplest terms, is the rate at which the general level of prices for goods and services is rising. As these prices increase, the purchasing power of our money falls. This means that with the same amount of money, you can buy less today than you could yesterday. The understanding of inflation is crucial for effective money management. Recognizing the trends and patterns can guide your investment decisions and spending habits, making your money work smarter for you. Inflation is a vital economic indicator, and understanding it can help you make more informed financial decisions. Inflation doesn't just happen randomly, it's caused by various economic conditions. There are two main culprits we need to understand when we talk about the causes of inflation: demand pull and cost push. Let's start with demand pull inflation. Imagine a bustling marketplace where everyone wants to buy the same trendy item. Let's say, for instance, it's a limited edition sneaker. The problem is there are only so many pairs of these sneakers available. As the demand for these sneakers rises and the supply remains limited, the sellers can charge more for them. This is a simple example of demand pull inflation. It occurs when the demand for goods and services exceeds their supply, causing the prices to increase. On the other hand, we have cost push inflation. Let's consider a bakery that sells delicious pastries. One day, the price of flour, a key ingredient in their pastries, goes up. Maybe there's a wheat shortage, or the cost of fuel for transporting the flour has increased. The bakery now has a decision to make. They can either absorb the cost and make less profit, or they can pass the cost on to the customers. More often than not, they'll choose the latter option. The increased production costs lead to higher prices for the pastries. This is cost push inflation. It happens when the costs of production increase, pushing the prices of goods and services up. So, whether it's the popularity of a limited edition sneaker driving up its price or the rising costs of flour causing your favorite pastry to be more expensive, inflation is at work. It's a complex economic phenomenon that can be boiled down to these two main causes: demand pull and cost push. So inflation arises either from increased production costs or increased demand for goods and services. Remember these causes, and you'll have a better understanding of why the cost of living tends to increase over time. Inflation isn't just an abstract concept, it has real-world effects that can impact your daily life. To understand this, let's start by looking at the broader picture: the economy. When inflation accelerates, the value of money decreases. This leads to a situation where more money is needed to buy the same goods or services, effectively reducing the purchasing power of consumers. Businesses also feel the strain as the cost of raw materials and other expenses rise, which can result in reduced profit margins. The economy as a whole can be affected, as these factors can lead to slower economic growth and uncertainty. On a personal level, inflation's effects can be quite tangible. Imagine you've been diligently saving, only to find that the value of your savings is being eroded by inflation. This typically happens when the interest rates on your savings don't keep pace with inflation. In simple terms, the money you saved yesterday is worth less today. The ice cream you could buy with $1 last year may now cost $1.10, leaving you with less ice cream for your money. But it's not all doom and gloom. Interestingly, inflation can actually benefit borrowers. Think about it. If the value of money is falling, then the real value of your debt is falling too. Essentially, you're repaying your loans with money that's worth less than when you borrowed it. This is what we mean when we say borrowers repay their loans with cheaper money. Inflation is like a seesaw. It could tip in your favor, or it could tip against you. It's this delicate balance that makes understanding and navigating inflation so critical. While it may seem complex, gaining a firm grasp of these concepts is a core component of financial literacy and wealth management. Whether it's eroding your savings or reducing your debt, inflation has tangible effects that directly impact your financial health. Inflation can seem intimidating, but there are ways to protect your finances from its effects. One of the most effective strategies is investing in assets that tend to increase in value over time. This could be real estate, stocks, or even certain types of collectibles. These assets can act as a buffer, helping your wealth grow even as the cost of goods and services go up. But don't just throw all your money into one type of investment. Diversification is key. A diversified portfolio is like a financial safety net. It spreads your risk across different types of investments, so if one area suffers during inflationary periods, others may thrive. This way you're not putting all your eggs in one basket. Keeping an eye on interest rates is another important strategy. When interest rates are high, it's more expensive to borrow money, but you'll also earn more on your savings. Conversely, during times of low interest rates, saving money becomes less attractive, and borrowing costs are low. Now, I'm not saying you need to become a Wall Street whiz or a real estate mogul to protect yourself from inflation, but having a basic understanding of these strategies can go a long way. And remember, the best investment you can make is in your own financial education. By making smart investment choices, you can protect your wealth even in times of inflation. Inflation is a complex but crucial part of our economic landscape. Today we've demystified this concept, delving into its definition, causes, and effects. We've also explored strategies to shield your wealth from inflation's impact. Understanding inflation is a key piece of the puzzle of financial literacy, a cornerstone of savvy wealth management. Thank you for watching EXOUSIA Investing TV, and thank you for being a part of our financial empowerment and wealth wisdom community. Like, comment, and share, and don't forget to hit the bell so that you will receive more of our financial empowering content. Let us know in the comments your thoughts on this content and if there is a topic you would like us to cover. See you next time for more keys to financial literacy and insights for mastering the art of money management and generational wealth.